I do these 10 surprises every year, and one of mine was, that we hit six figures. We definitely take out the all-time high. That could happen in days, right?
Sure.
Once people realize that these ETFs are taking out more Bitcoin out of the market than is mined every day, and after the halving, it's going to be 2 or 3 times that. So it's just a supply-demand problem. So we had the demand shock, and basic supply and demand, right? If demand goes up and supply is fixed, P1 is higher than P2, basic economics. But if then supply shrinks, right, P2 is higher than P1. So we're having a demand shock right now, and we're going to have a supply shock in April. We're going to go from 900 Bitcoin a day to 450. You put those two things together, number go up. And then we haven't even talked about the FOMO part and the leverage part and the stupid part where, dumb people play dumb games and win dumb prizes.
Yeah.
And people will lever up again, which is not smart. Why would you ever lever up an 80 vol asset?
We can't help ourselves. Greed.
I know we can't help. Yeah. So.
Bitcoin could hit $100,000 plus and could easily surge by over 800% to equal the market cap of gold. These are the words of Mark Yusko, founder, CEO, and CIO at Morgan Creed Capital. Recently, Yusko shared his bullish predictions for Bitcoin, emphasizing the potential for significant price growth. Speaking about the recent approval of Bitcoin spot ETFs, Yusko offered insights into the launch and its impact on the market. He highlighted the record-breaking trading activity over the first 2 weeks, with BlackRock alone taking in over $3 billion worth of Bitcoin. Despite differing opinions on the initial success, Yusko sees it as a tremendous launch for digital assets. Make sure to stick around until the end of the video where Mark Yusko reveals Bitcoin's future price, particularly during the upcoming crypto fall, which he thinks begins at the Bitcoin halving. Also guys, if you want to stay most up to date on the crypto world, I send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all for free. Click the first link in the description, enter your email, and join over 40,000 others to become a better crypto investor right now. Now here's Mark Yusko with why he thinks Bitcoin could reach over $300,000 per coin.
People are talking about it in different ways. There's people saying, oh, it was a total failure. I'm like, what are you talking about? I mean, we set all-time records for ETF trading on the first day. When you put together the basket, it was $4.6 billion of trading in the first day. Like, oh, but there was only a few $100 million of net inflows because GBTC was being liquidated. I'm like, sure. I mean, did people expect on day one, all the, advisors out there would say, oh, I made a mistake. Clearly, I should rush out and load up. No, it's going to take time for education. All the advertisements are going to come. You're going to have, you go to BlackRock.com.
Yeah.
Their landing page, their main landing page for the whole firm is an ad or the one pager for IBIT, their Bitcoin ETF. So that's a big deal. I mean, that's a really big deal. And so here we are 4 days into trading, and we've got $1 billion of net new money into IBIT. We've got $2.5 billion of capital across what they call them the newborn 9, and then GBTC converted. And yes, it's losing assets because they kept their fees really, really high, knowing that the people who had a big tax gain aren't going to sell over fees. So it's kind of a little bit of a cash grab because they've got some challenges, I think, over at DCG. But bottom line, I think it was a tremendous launch, tremendous day for digital assets broadly. There's all the maxis are upset because, these people don't own Bitcoin. You're right. Technically, you're right. The Bitcoin was created so you and I or anyone else could exchange value without an intermediary. So no, these people are not going to hold their keys and they're not going to put it in cold storage. But here's the thing. There's going to be a transition from TradFi, traditional finance with trusted third parties, to ultimately DeFi or NoFi, right? Where there's no trusted third parties. This is going to take time, but this is a great stepping stone for people to add what has been the best performing asset over the last decade. It's actually been the best performing asset 12 of the 15 years it's been in existence. Most people have zero exposure. exposure. Not people listen to the podcast, but most people have zero. And, I've been talking about this since 2017, 18, right? Get off zero. Zero is the wrong number. Now, I'm not saying 100% or 90% or 80%, but zero is just wrong. And you want to have some of this asset in your portfolio for lots of different reasons. For the low correlation to other assets, it protects your portfolio. For the fact that it is a store of value against devaluation of currency. And I just read a stat right before I came on with you. Crazy. So we've added $1 trillion of debt to the national debt in the last 3 months. Now, just again, to put that in perspective, you and I would have to sit here together for 31,710 years and spend $1 every second. That's 1 trillion. So it took 199 years to get the first trillion of debt in this republic, and the last trillion came in 3 months. So what does that mean for the purchasing power of our fiat, the money that we're paid for our work and our service and our lives? Well, it's going down. And I don't have to tell anybody who has gone out to lunch lately or bought a coffee lately or tried to buy a house lately, the value of the money is going down. It's being devalued by the creation of this, what I call the fiat fiasco. And so having a portion of your wealth in this asset that is the antithesis of an inflationary fiat currency, it's a deflationary store of value. It's just a logical, rational thing to do. What does Jamie Dimon do? He runs the largest bank in the world. He runs one of the largest banks in the world. It's a really powerful guy. So wait a minute, what does blockchain technology do? It does to financial services what the internet did to media and commerce. Amazon exists because of the internet, and mom and pop shop, a lot of them went out of business because you can buy it from Amazon. Same thing's going to happen to finance. So he runs a financial services firm that is threatened by this new technology, Bitcoin being one manifestation of it. And so, yeah, he's nervous. Yeah. My other view is you can always judge the quality of an idea by the quality of its detractors, right? If you have an idea and no one who's important or meaningful hates it, probably not really that big an idea. If you have an idea and people who have power and influence don't like it, you're onto something. And you can go back in history, we said Martin Luther King Day, right? He had some detractors in really high places and probably ended up, costing him his life for that, right? For taking a stand for human rights and civil rights. But if nobody cared about that, then it wouldn't have been a big idea. But it was a really big idea, and one I personally am very grateful for him, Satoshi or whatever his name is, Satoshi. Satoshi's going to come and he's going to just create a bunch more. He's going to be laughing at you. And Jameson Lopp, one of the core developers, said, here are the 5 lines of code that cannot be changed by any one person. Now, if we all decided collectively to make changes, we could do that. And any change that's beneficial to the network, we'll probably all approve. But anything not beneficial to the network's not going to get through, no matter who you are. So, Satoshi, whoever he, she, they are, he identified as a he once, so it's probably a he, or maybe a group of he's, actually said, I'm giving up my project, so I'm not in charge anymore. And so what's interesting about all of that is there are these other blockchains that are centralized. And different levels of centralization, but they're centralized. And it's not shocking at all that the Bank of International Settlements and World Economic Forum are working with things like XRP and Stellar, because those are centralized. And XRP people are going to hate when I say that, but they are. And that's what they want. They want private blockchain, permissioned blockchain. And even Ethereum and consensus and its ties to the banking system says to me that it's permission. I want to live permissionless. And I'm tired of having the bank have to give me permission to get my money, or a brokerage firm give me permission to take my securities and transact with you. In a permissionless world, banks, brokerage, insurance companies, auditors, accountants, they're less important. And that's why this is so feared. But just like every innovation, right? The internet was feared, air travel was feared, the radio was feared, television was feared, electricity was feared. There are these great pictures from the 1900s, electric wires and these demons coming out like it was going to ruin the world and it was going to poison everybody. No, electricity is awesome. It makes my life so good. It makes what we're doing possible. And blockchain is the same thing. Bitcoin is the same thing. So it is big. It's here to stay. And here's the thing. There's 30 trillion in boomer accounts managed by financial advisors. It's a lot, 30 trillion. If 10 basis points goes into these ETFs, okay, that's $30 billion on an asset that trades about $10 billion a day. That'll move the price a lot. If 1%, which is not even crazy, 1% should be like the minimum you should put in. I'd argue 2, 3, 5, 8, 10, but 1 is the minimum. That's $300 billion on an asset with a current market cap of around $900 billion. So we're talking about a really, really big growing demand. And what people forget, when GBTC launched, they raised about $10-ish billion of new fiat that went into GBTC. And price of Bitcoin went from about 10,000 to 59,000 in a matter of months. I mean, it was a total parabola. And yes, then it crashed down to 30, and then it went back to 69, and then it crashed all the way down to 15. And today, we're closer to 69 than we are 15. So that, I think, history is going to run. And so as that parabola, as that FOMO picks up later this year, post the halving, and we get into what's called crypto fall, which is when all of the activity and the media attention, and I think we could go very, very quickly from where we are today to 6-digit Bitcoin. I mean, like faster than people can imagine.
So there's Mark Yusko with his take on Bitcoin, saying it could skyrocket to over $100,000 and grow by a whopping 800%. Yusko is all about educating investors, highlighting the move from traditional finance to the more modern decentralized finance. He thinks Bitcoin is a key player, offering a way to transact without needing anyone's permission. He even drew parallels with how people initially felt about other game-changing technologies. Looking ahead, Yusko sees a bright future for Bitcoin, and it's going to be interesting to see how it all unfolds. Before we go, a quick reminder for those who are keen on staying updated in the fast-paced world of crypto and Bitcoin. Consider subscribing to our daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 40,000 subscribers for insightful crypto investment information. Click the first link in the description to join our community and elevate your crypto investment knowledge today. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.